this video, we're going to analyze Assa Abloy. This is my opinion only, so do what you will. Assa Abloy is a company that sells door frames, hardware, software, tools, and configurators, uh, and is basically the biggest in the market. It has no established competitors because it's basically dominating the market. It's literally buying like every startup and anything that shows prospect and promise, making it bigger. Another thing of Assa Abloy, it's very old. It's it can date back to 1995 on the graph, as you can see. And the product it sells, it's locks, doors, and stuff. It's something that everyone needs, everyone uses on daily basis. That's why I believe in this company. uh, and in a world that's going towards automation and you know digitalization, new locks and like doors that can be opened using the phone or pass keys, safer technologies will be used in this day of age, which is no surprise. uh, that's where the world is headed, and doors will always be needed, locks and other stuff. And as you can see on the software, it has, uh, as you can see on this picture, Persona Campus Solutions. It's basically you open the door or the uh, yeah, you open the door using your phone as the passkey. And yeah, and every building that is built, like every new project, as the population increases, there will of course be new projects that are built, skyscrapers, homes. They will all need doors, all need locks. And this is where Assa Abloy comes in. It has specialty doors, revolving slide doors, standard hollow doors, decorative doors, and that's what sets it apart. And moving on to its financials. Yes, and one more thing, that the CEO is Nico Delvaux, something like that. It's very important to know that the CEO has a major stake in the company, which is shown here. He owns 0.03%, uh, which has a market value of 130 million. This is very important. It shows that the CEO's own money is on the line, and uh, he would of course want to improve the value of his money. Moving on, from 2020 we see a growth, year over year. Gross profit as well. It's they spend a lot of money on acquisitions and stuff, but as you can see, there is an increase in revenue, increase in operating margins. This shows that the company is well taken care of, and the decisions are made, good decisions are made. And as you can see, EBIT increases, net income as well. So basically, the company increases its value year over year. But when we go to the quarterly, this quarter, March 2025, it was a very slow year. As you can see that the operating income decreased, EBIT decreased, but this is mainly due to the tariffs. After Trump announced the tariffs, uh, Assa Abloy basically bought more stock from, not stock, but inventory from China to counteract the increasing costs from the tariffs. So the major like logs and metals and stuff, they are manufactured in America or outside of China, but some some parts of the doors of the technologies is manufactured in China, which is hard to, it's hard to open new factories so fast so soon. So they bought a lot of inventory. They bought a lot of inventory, and this basically will counteract the tariffs because they will already have the inventory for the use. Uh, yes, and that's why the EBIT decreased, the EPS decreased, basically earnings decreased as a whole. But when we go to I listened to the webcast, and it basically said that Nico was very optimistic. He called this quarter a good start of the year, which suggests optimism, which is a good thing, of course. And yeah, that's basically it. Moving on to valuation. Currently, I believe it's a little bit overvalued. EV/EBIT of 13, a peg of 148. That's too much, too high. Um, that's why it's not really a buying opportunity if it comes down like a couple percent. During the dip, when the tariffs were announced, these were good buying opportunities. I think about that like PE 18. It was a good buying opportunity. Uh, the peg I think was at 2, 3 I think it was. But this company grows a lot. It literally buys anything that emerges, meaning it's the giant, it's the biggest in it of its type. And that is a very big advantage for the company. Looking at its debt, so the long-term debt is 54, I think it's in millions, so that's 54 billions, I believe. 500, yeah. Anyways, we see that the long-term debt and the total assets, like the total assets is much more than the debt, and the total liabilities, even when that's compared to the debt, the assets are twice as large. This quarter we have seen a positive 2% organic growth, I believe it. Yes, here. Strong the market value contributing to a organic sales growth the first quarter, of course, which is a good thing. So, in summary, I believe this company is a very good company. It has a good competitive advantage. The CEO owns shares, which is a good thing. It has shown growth year over year, um, and it's an old company, meaning it's been around for very long and has navigated a lot of challenges. That's why I believe this company is definitely a buy. But in the current valuation, I believe it's a little bit overvalued, to be honest. And if you look at what analysts say, we can determine that most of them basically suggest a hold. 8 people suggest hold, and I will agree with that because the company will grow. It will be here in 20 years. So, yeah, that's basically it. Thank you for watching. Like, subscribe.